Hi everybody, welcome to this week's additions to the Maqro Minutes. It's the 24th of February. I'm Mark Gardner, I'm the new head of trading here at Maqro Capital. I've come from a background of derivatives trading, 24 years financial markets experience, 16 of which I was a professional trader. And I've recently joined the team, so I'll be doing more active traders and more short-term to medium-term plays. If you're interested, you can subscribe to the trading report. But on with the minutes. So 3 stocks from our universe in the past week. Now we have Macquarie Group is the first one. Macquarie over the past week has come out with 2 key announcements. The first one was regarding an offer of fully paid convertible securities, which are Macquarie Capital Notes 5, or the code is MCN5. That was at an issue price of $100 to raise $500 million. The offer aligns with their strategy to diversify their funding sources and capital mix. Macquarie also provided a guidance upgrade from an expectation to be slightly down comparable to last year. For 2021 to now to be up between the range of 5 to 10%. This upgrade was made on the back of extreme weather conditions in North America, which spurred increased demand of Macquarie's commodities and global markets business, which physically ships gas to major pipelines across the US. This month alone, the share price has risen over 10% anticipation and consequent response to these releases. So the next one we have here is Rio. Rio's financial FY20 results were ahead of expectations. Revenue growth is exceeding these expectations by 3%. This outcome was largely a result of Rio's iron ore operations, which offset lower revenues across other key commodities. Rio is set to pay a $5.19 per share dividend, made up of an ordinary dividend of $3.99 and a special dividend of $1.20. This represents a fully franked dividend payment of 6.2%. Due to the surging Aussie dollar, Rio reported results in their iron ore operations that exceeded previous guidance and elevated the performance of the company's Australian dollar denominated operations. With operations benefiting off iron ore increases and public infrastructure-led stimulus package, we view Rio to have further upside. The research team upgrading the price target to $145 this week. Next one we have here is Fortescue, or FMG. FMG also enjoyed the benefits of the iron ore demands and increases through their first half 2021. These 2 factors represented tailwinds that materialised into a 44% increase in revenue relative to the period comparable last year of $9.3 billion. To provide further colour, EBITDA and net income grew considerably by 57% and 66% respectively. The results continue to improve with the share buyback program during October, allowing FMG to increase their interim dividend by 93% compared to that of first half 2020, rising to a fully franked dividend per share of $1.43. This represents a payout ratio of 80% NPAT first half 21, an attractive single dividend yield of over 8.5% fully franked. FMG did also announce the resignation of various executives in charge of the Iron Bridge project, which is a smaller project which hasn't come online as yet in the same Pilbara region. Despite an initial price reaction to the downside, it recovered when it was clear these changes had immaterial effect on any detrimental EBITDA contributions the project would make. So next up, we've got 3 stocks to look out for over the next week. We're going to start with Kogan, or KGN. On the 26th, Kogan will release their official first half 21 results. They released a trading update late January, which outlined a record half-year period, with gross sales up 96% and gross profit up 120%. Strong results are expected to be reported after e-commerce penetration improved through 2020, with government stimulus helping elevate consumer spending. EBITDA is expected to report an increase of 140% with the help of an enormous Black Friday week, which brought in over $50 million in gross sales. Kogan's share price through February has fallen, however, by 20%. This suggests that the market's concerned about the post-COVID world and that potentially that Kogan figures will normalise and not continue to outperform. Next one we have is Afterpay, APT. Look, this stock's had a stellar run in 2020. It's immediately continued to perform very well in 2021, rising to all-time highs above $150. APT will report this Thursday, the 25th. In anticipation of this release, Morgan Stanley have cemented their bullish outlook with a 25% upgrade in their target price of $170. Sorry, to $170. Although trading at 75 times sales, Morgan Stanley will believe that APT will be the future winner of the buy now, pay later space, with the untapped potential growth more than accounting for the significant valuation. The earnings release and investor call will provide an opportunity to gain insight into the management strategy moving forward, and where they'll see the run rate of the company as they continue to challenge and shape a completely new segment within financial services. Last but not least, we've got Macquarie Telecom Group. It's expected to report over the next week. Macquarie Telecom provides telecommunication services pretty similar to Telstra. Cloud services, hosting services and data centres. Its clients are mainly government departments, and with public spending being the main catalyst for the business. Over the last year, we've seen a surge in that government spending. The large amount used to support the economy. Government capex expenditure rose to 8% at the end of last year. So this should provide a very positive growth outlook for Macquarie Telecom Group and a supportive outlook for 2021. So looking ahead to next week, so this Friday we have US GDP numbers, which will be Saturday morning at 12:30 a.m. These numbers are expected to complement the decrease in the US COVID infection rates released over the weekend, and the strong vaccination numbers. The strong numbers out of the world's largest economy will only elevate the global recovery thematic and consolidate an existing bullish market sentiment. So we also then have, as per usual, the first Tuesday of every month sees the RBA board meet for their cash rate decision. Although the cash rate is an all-time low and is very unlikely to move for quite some time, all eyes will be on the RBA's quantitative easing program. The Aussie dollar is at a 3-year high, and the RBA is expected to continue QE as per their previous comments to curtail the dollar's appreciation. And also long-term interest rates, with a spike in 10-year yields in Australia above 1.5% this week. Also next Wednesday, we're going to see economic data released in Australia and GDP. With the vaccine rollout underway this week, the market will be very interested in knowing what past numbers will reveal to potentially foreshadow the year ahead. But as per previous releases of late, when so many unknown factors, the market reaction probably will be muted, with so much forthcoming news to affect the market. So that pretty much wraps everything up here. Thanks for joining us, and we'll speak next week.